European session. Fantastic, fantastic. Thank you, Mary, Leslie, Steve, Alan, and everyone else. I also want to say thank you to Trading Pub for giving us an opportunity to come on here and representing the Forex side of on behalf of Market Traders Institute. What I would like to do is do who I am, who I represent, and then jump right into the live market, giving you a trading opportunity or a trading plan and a strategy that you could potentially utilize tonight. We are seeing some historical movements inside the Forex market, especially during the active zone or the European session. And so the individuals who are intentional about trading during that area are seeing dramatic gains and putting themselves into a position to profit. So if that sounds something that's interesting to you, then by all means, let's go ahead and continue on. Before we get started, just understand there is risk involved in trading the Forex market. You should never look to invest funds that you cannot afford to lose. Always keep equity management in mind. Understand that I am not a CTA, which stands for Commodity Trading Advisor. Basically, what that means is I can't place trades for you. What I can do is put you in a position of empowerment, providing you the highest winning percentage trading plan, according to our rules here at MTI, and allowing you to say, yes, I'm taking the trade, or no, I am not. What can help you make those appropriate decisions is by going through the education. So it's important that you go through your education in its entirety and begin trading as a knowledgeable and educated investor. Now, I represent MTI, which stands for Market Traders Institute, and we were founded in 1994. We just celebrated 21 years of educating investors all around the world. The building that you see on the picture, that's where I'm located right now. That's our office building. In this building is as well as over 100 of the most talented staff members in the industry. We are located in Lake Mary, Florida, which is right outside of Orlando, where Mickey Mouse lives. Market Traders are great successful Forex traders. Now, we were voted in the top 10 best places to work in Orlando business. We have been nominated for the 2014 Star Award for Best Forex Education. We are considered to be world leaders in Forex education. We have been seen on CNN, Fox Business, CNBC, and Bloomberg Television. MTI has a huge reputation in investing into their students, providing lifetime education and lifetime support. In 2014, MTI spent over 2.4 million US dollars supporting and educating their investors, and as well as reinvesting into the education technologies and advancements. In 2015, we're projected to invest just shy of 3.1 million US dollars. Why so much? Well, it's real simple. We have trained over 30,000 clients worldwide, and we do provide lifetime education. So we have a tremendous following. We do have a formula that works, and success is a formula. It's not a fantasy. And what I'm here to do is teach you just one of the many, many, many formulas that have been proven to allow investors to generate income. Now, today we're talking about the Forex market, so it's important that you understand what the Forex is. The Forex market is the largest financial market with almost limitless amounts of liquidity, which really means it is a market of limitless financial opportunity. There's over $5 trillion traded within a 24-hour period on the Forex market, and it is open 24 hours a day. And then it remains open all the way until Friday, which it closes at 5 p.m. Eastern Time. So 5.5 calendar days throughout the week. That's important because it's very convenient. For those of you who have day jobs, who work crazy hours, 10, 12, 15 hours a day, this is perfect for you. You can trade before work or even after work. A lot of investors get started that way because you can trade it at home, and you can trade it as long as you have internet connection. What's also really neat about the Forex is that it really allows you to focus. You don't have thousands of currency pairs to choose from. It's really right around 60. And what you're going to be focusing in on is what's called the G7, or your global 7 currency pairs, the most traded currencies, which are the US dollar traded against the Great British Pound, Euro, Australian dollar, New Zealand dollar, Swiss franc, Japanese yen, Canadian dollar. And you really have $5 trillion pumping through, traded back and forth within a 24-hour period on the Forex, which means liquidity. It's unbelievable. As soon as you place a trade, your trade gets executed, and then when you want to exit your position, you actually get to exit at the price you want. Versus other markets to where liquidity or finding enough buyers and sellers can be an issue because this is such a condensed market. So it's important that you understand that what we're trying to accomplish in the Forex market. What we're trying to accomplish here is we want to capture what's called pips. That's really how you measure your success or your failures in the market. A pip is, to kind of give you an idea, a pip means price interest point. There are 100 pennies for every $1 US. Please be so kind to type in a wire yes if you understand that inside the Forex market we are trading fractions of pennies worth of movement. And those fractions of pennies are called pips. It's really simple, straightforward, and shouldn't be overly complicated. Okay, so a pip should be worth to you depends on your lot size. So leverage will give you the buying power, what you're seeking for. This is also a huge attraction of why investors choose to trade the Forex market. Not only is it a 24-hour market, but you don't really need a whole lot of money to make some decent income. So for example, there's what's called a micro lot. It's a $20 investment on average. One pip is equal to 10 cents. So if the market moves 10 pips, you just made $1. Or the market goes against you 10 pips, well, you just lost $1. When you look at the market, it's pretty clean. If you want to buy, you just buy it, and depending on how many pips you make or how many pips you lose, depend on the results. Now, many investors who first start out, this is where they hang out with. They hang out with the micro lot area simply because you can make a lot of mistakes and not really have to suffer a big financial consequence. Gain your experience in this area. Make mistakes and have it be cheap. When you begin to become a little bit more comfortable, move to a mini lot. A mini lot position is on average a $200 investment per trade. If you think the market's going to go up, just buy it with an average investment of $200, and one pip is worth $1. If you make 10 pips, well, you just made $10. If you lose 10 pips, you lost $10. Once you gain your experience and you begin to fine-tune your formula of the strategy that best fits your personality and your equity management allows you, move to a standard. This is where we see the biggest financial change in traders' career, both positive as well as negative. Do not move up to a standard position too soon. It can really hurt you. And if you're not ready for it, don't do it. But a standard position can also open the financial doors that may be closed simply because you don't have enough money. What I mean by that is this. A $2,000 investment per trade. Every pip is worth $10. The market can move anywhere between 100 and 300 pips per day per currency pair. So let's just say you capture the low end, 100 pips, or an extra $1,000 in a single day kind of interests you and having the opportunity to make per currency pair. What if you trade two currency pairs? That's $2,000. Well, what we're going to do when we jump into the live market, we'll be identifying the opportunities and looking to capture exactly that. So important that you understand what we're actually doing in the market. We trade one country's currency versus another. And we look at Japanese candlesticks, and those are the candles in front of you. White bars represent bullish candlestick. This means when one country's currency is gaining strength against the secondary currency. And then the dark bars mean vice versa. That means the one country's currency is devaluing itself against another one. So it's a good idea to look to try to buy the market when it's going up, and it's a good idea to look to sell the market when it's going down. What I want to do is introduce who I am and why I have the Forex Authority on the market today. My name is Joshua Martinez, and I'm MTI's product expert. I have trained thousands of Forex investors. I've personally turned an initial deposit investment of $500 and generated over $39,000 of profit from it. It took me about a year and a half to do, and it's third-party verified. I've made thousands of Forex investments. I'm a published author, international speaker, professional analyst, and a full-time trader. And to MTI standards, I am a Forex. Be so kind to type in a wire yes in the question section box if you can see this track record in front of you. Well, what this track record represents is when I first started trading. You know, when I opened it up with $500 on June 5th, 2011, and I started trading mostly because I had no money. I was extremely broke at the time. And when I started investing, I was trading 10 cents a pip, making like $7, $8 when I won trades, and when I lost trades, I lost like $5, $4. Well, I stuck with it, found a formula of success that worked for my personality. A year and a half later, after compounding, and of course, whenever I received a paycheck, I tried my best to put in a few extra bucks every time I could. But a year and a half later, I started making returns of $4,500 a trade, making $2,500 a trade, withdrawing $10,000 at a time. Did I have losing days? Sure. Here's a losing day of $779 US, but compare that to the wins of $3,200, $3,400 over $7,598 US. Equity management is absolutely in alignment. The track record is third-party verified through myfxbook.com with a 4,548.82% return on the initial deposit investment. So, I've experienced days which investors are trying to accomplish and may have only thought was possible for the mighty, but simple question that you want to ask yourself is this. Would you be pretty pleased making an extra $8,000 a day? I'm not saying you're going to do that tomorrow, but would you like to learn the skill that can grow you into generating or having the opportunity to make $8,000 in a single day? Maybe once a month, maybe once a quarter? Well, I'm going to show you the strategy which I've been utilizing that has allowed me and assisted with me accomplishing exactly that. So let's go ahead and take a look at your screen. You charting software. This is the ultimate charting software on demand. And what I want to do is bring up my Great British Pound currencies. We will be viewing 1 hour time frames, which means every currency pair does represent 1 hour, 1 hour of trading. And let's tile these. So if you want to learn this strategy, you're going to want to write down these currency pairs. GBP against the Australian dollar, GBP against the Swiss franc, GBP against the New Zealand dollar, GBP against the US dollar, GBP against the Japanese yen, and the GBP against the Canadian dollar. I'll give everybody about 10 or so seconds, 15 seconds, to either A, take a snapshot, or B, just write them down. It will be a huge assistance if you could just type in OK, done, confirm that you can see this on your screen, something that lets me know that the majority of you in the room are gathering this information. Okay, perfect. Well, and of course, this presentation has been recorded, so you will be able to review this at a later date. So, a couple of things. Number one, what I want to do is explain to you exactly what we're looking to accomplish, and then I'm going to explain to you why it happens, and then how to take advantage of it. Super simple, straightforward. We have 42 minutes to do this. So when the market moves, especially on the 1 hour time frames, you're going to have every single day, you're going to have a low of the day, and then you're going to have a high of the day. And sometimes the low forms first, and sometimes the high forms first, but every single day you're going to have a low, and every single day you're going to have a high. And that's just what happens. And what's amazing about the Forex market is it literally does the same things over and over and over again. There's called patterns. And what you want to be great at is recognizing those patterns. You see, a lot of people think that markets are just crazy places. They think it's chaotic and you think it's impossible to make income. Well, you got people in this world who are losers. You got people in this world who are winners. And then you got people in this world who just don't know how to win yet. Sometimes it takes somebody with the experience and the knowledge to show them the way and then show them how to win. And then it opens the door of unlimited possibilities. What I'm looking to do today is just show you how to win. It's going to be completely up to you to do what you want with it. But if you apply this strategy, you will be able to duplicate this formula of success. Because the Forex market does the same things over and over and over again, these strategies can be applied and consistent income can be generated. That's why you have bank traders trading the Forex market. That's why you have many fund managers trading the Forex market. That's why you have these gurus gravitating towards the Forex market, because the patterns are just so strong. One of the patterns is this. The first higher low, you may want to write this down, is going to form between 2 a.m. Eastern Time and 5 a.m. Eastern Time. The second higher low is going to form anywhere between like 8 a.m. Eastern Time and 2 p.m. Eastern Time. It's important you understand this, because the distance between the first low and the high of the day is literally your opportunity. And that can be anywhere between 50 pips and well over 200 pips in a single day. Now, once again, keep this in mind, the opportunity that's available to you if you trade a $20 investment per trade. Keep in mind on the low end, 50 pips would be equal to, 1 pip will be equal to 10 cents. This would be about $5 a day of opportunity on the low end. And mini lot investments would be a $200 investment per trade on average, and 1 pip will be equal to $1. And then you have what's called the standard lot, which is about a 2,000 US dollar investment on average, and 1 pip is equivalent to $10. And so it really depends on your buying power, but realistically, the compounding growth is really where it's at. But I like to trade standard positions. So I see a lot of great financial opportunity there with a proper equity management. This is anywhere between 500 and 2,000 US dollars a day. At the end of the day, everyone, at the end of the day, if you like the idea of saying, well, I like the opportunity of $500 to $2,000 a day, you may want to pay attention to this strategy. So the key is this. The key is identifying the first higher low, which forms between 2 a.m. and 5 a.m. Why? Because it's a 3-hour window. This is where you want to take a snapshot. This is where you want to take this information, write it down. This is your cheat sheet. I'll give everyone about 10 seconds to copy this down. Listen, even if you don't want to continue your education with me, that's completely fine. If you're going to trade the Forex market, you're really going to want to do yourself a favor and copy this information down, because if I knew this when I first started trading, it would have been and made the world of a difference with reaching my tipping points. It really took me about 1.5 years to be able to say, okay, I got it. Makes sense. I wish someone would have shown this to me. And so this has assisted with me generating the income that I've been able to accomplish. And based upon the track records of over 4,500 plus % return, that's something that you're going to want to use to make your decision of, hey, I want to do this, or hey, I don't. So 2 things that we're going to do. Number 1, I'm going to prove to you that this actually works. And then number 2, I'm going to show you how to take advantage of it. So all I'm going to do is just look to see what happened this morning. Please be so kind, type in a wire yes in the question section box if you can see that this candlestick, which is highlighted, represents June the 4th, 2015, and it shows 2 a.m. At 2 a.m. this morning, the market formed a low for the entire day. We know a lower high is going to form between 2 a.m. and 5 a.m. Let's look at the previous day. The previous day, 4 a.m. Please be so kind, type in a wire yes in the question section box if you can see that yesterday at 4 a.m. the market formed a low and then rallied up for the entire day. Okay, let's look at the previous day. Look here at June the 2nd, 2015 at 3 a.m. the market formed a low of the morning and then rallied. Let's look at the previous day. Look here at 2 a.m. We were associated on June 1st with the high of the day. We had a huge increase of volatility, and the market made a directional downward movement. Let's look at the previous day. This happens on all the Great British Pounds that I asked you to write down. Look here, 4 a.m. on May the 29th. We formed the high of the morning and fall. Amazing. Just completely mind-blowing that these patterns exist. 5 a.m. on the 28th. Market forms a low and then begins to rally. Okay, let's keep going. See, all I'm doing is just pointing out patterns. I'm just pointing out what's happening every single day over and over and over again. 4 a.m. on the 27th, and I'm going day by day by day, starting from today's date and work my way back. Now, on your own, I do encourage you to spot check this. It's always great to spot check how this works and to make sure that, this worked 20 years ago, 10 years ago. Because if you want to use a strategy that's going to work today, tomorrow, next year, 10 years from now, it's a really, really good idea to use a strategy that's already worked yesterday, that worked last week, last year, 20 years ago. This is one of those strategies. Let's look at the previous day, 3 a.m. on the 22nd. This was not the high of the day, so hey, by all means, not every single day you're going to have the high. It's not 100%. It's not the holy grail, but it definitely wins more than it loses, and assists you in finding direction. Previous day, here's 2 a.m. May the 21st. Forms a low and then rallies for the rest of the day. Let's keep going. Here is 2 a.m. May the 20th. Associated with the low, a directional push up towards the north. Let's keep going. 3 a.m. Eastern Time. May the 19th. High of the morning, directional downward push. Previous day. 3 a.m. Eastern Time. 5 a.m. Eastern Time. Market forms a low in the morning. Up. Let's look at the previous day. Ladies and gentlemen, please be so kind to type in a wire yes in the question section box if I'm beginning to prove to you on several, and plethora of examples that this is working. Market forms a higher low between 2 a.m. and 5 a.m. Eastern Time. 2 a.m. on the 14th. And I think I began to prove my point. I don't think I need to go back any more days, and I don't think I need to kind of, kill this. But at the end of the day, we really need to ask ourselves a couple questions. Question number one is this: why does this happen? And question number two is, how do we take advantage of it? Well, the reason why this happens is because the Forex market's open 24 hours a day. And it's broken up into realistically 3 major trading sessions, which allows it to maintain its open policy. Sunday from Sunday 5 p.m. to Friday 5 p.m. Eastern Time. And you have what's called the U.S. session, then the Asian session, and then the European session, which all, signifies which regions of the world that is open and most active. Well, the European session is where predominantly the largest amounts of Forex transactions take place. A lot of it has to do because bulk transactions get sent over there. For example, I live here in the United States. I live in Lake Mary, Florida, right outside of Orlando, where Mickey Mouse lives. And let's just say, hypothetically, I owned 100 car dealers. car dealerships. And let's say I'm an exotic car dealer. I have to, my cars are shipped over from Europe. And it's the end of the quarter, and I need to refill my inventory. And so I need to buy $1 billion worth of inventory. But I can't pay in US dollars. I got to pay in Great British pounds. Well, I need to exchange my US dollars for Great British pounds so I can pay for it, right? Well, it's not like I can go to my local bank here and just say, hey, can you exchange $1 billion US dollars for Great British pounds? What's going to happen is I'm going to be pushed off until a bank can begin to handle a transaction that size. And most of those transactions, or banks that can handle it, are located in Europe. And so what happens? Well, I'm doing this. And the reality of it is there's a plethora of individuals who are looking for bulk transactions. And when I process my order or request my transaction here in the United States, Europe's closed. And so when Europe opens, they're going to have pending transactions. And so they begin to open up at 2 a.m. And because of the time zones and because it takes a couple hours for all the banks to open up, take a handful of hours for all the banks to begin to process their transactions. And because of how large they are, it causes directional pushes. So my question that I have for everyone in the room is, does it make sense that the reason why the market forms a high or low between 2 a.m. and 5 a.m. Eastern Time on predominantly a daily basis on the Great British Pounds is because the banks are opening up when the European session opens up and directional orders are being placed. So this way, if someone asks you and just says, hey, why does this happen? You can speak about it. And so now the question comes down to this. How in the world do I take advantage of it? Well, let me show you how. You build consistency and to make sure that we're not just jumping around candle to candle, especially if you have no experience of being able to do so. We're going to utilize the 3 a.m. Eastern Time closed 1 hour candlestick. These candlesticks, when I click on here, or when I highlight it and it says 3 a.m., it is measuring or counting when the candlestick opened, not when the candlestick closed. So this candlestick opens at 3 a.m., but because it is a 60-minute time frame, by the time it closes, it's 4 a.m. And so this is my 3 to 4 a.m. candlestick. When this happens, as an investor, it doesn't matter what strategy you use. It really doesn't matter who you learn it from. Your job, if you want to be successful, is really straightforward. It's to buy low and it is to sell high. And what you're learning is you're learning a gauntlet of strategies to allow you to do this. And sometimes you got to plow through 4, 5, 6, 10 strategies before you find a strategy that fits your personality, that allows you to follow through. All you need to do is find a strategy that's easy to obey, easy to execute, and easy to follow through. And if you can just do the rules and just follow the rules, predominantly you're in great shape. It's when you begin to do whatever you want and not follow the rules is usually when you find yourself in trouble. It's kind of like driving on the street. If you speed, you're going to get pulled over. If you run a stoplight, probably going to get in an accident. You may get away with it a few times, but not every time. Same thing with trading. So when you learn these rules, follow through with it. So this is my close, my 3 o'clock candlestick. And it's going to be my job to say, am I buying or am I selling? And what you need to do is determine whether or not the market is at a buy low or sell high price. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay? You have a 70+% chance that the market's going to form a higher low right now. And coupled with just some basic market knowledge, such as past resistance becoming future support, what that basically means is markets form lows and highs at the same area. You would begin to view this and say, here's a past high, which has held and pushed the market up there, and more likely is going to help push the market up now, which means this is what's called a buy low. So we want to set up to buy the market. Some of you who are very fresh, you have no idea what this means. Just understand that if you find yourself a good mentor, this information is relatively straightforward, and being up to speed, being caught up to speed shouldn't take too long. So what I want to do is set up for a buy. And so I'm going to look at my candlestick, my closed 3 a.m. candlestick, and I'm going to place an entry buy order. 10 pips above this high. So if it's 57.67, this will be what's called an entry buy plus 10 pips above high. I'm going to have a stop. If you don't know what a stop is an automatic exit for loss. Stop at low. We would like to predetermine how much we're willing to lose per trade. Listen, you're going to use percentages to say, I'm going to try to make this much money today, or I'm going to try to make this many pips today. And that's what you're looking to accomplish. There's no guarantee in that. But what you can control is how much you're willing to lose. That's why stops are important. If you abuse your stop, you can take unnecessary losses. So make sure you educate yourself on what are good stops and what are bad stops. So in this scenario, the risk is 76 pips. So if I take this trade, I'm going to lose, and I lose, I'm going to lose 76 pips. I want to trade a standard position, so I'm going to trade an average pip size of $10. I'm okay with risking $760 or losing $760 today. For those of you who are saying, hey, that's too much, that's fine. Lower your lot size. Trade $1 a pip. That's only $76. Or trade 10 cents a pip. It's only $7.60. Now, your reward will always be at least 50 pips. Okay, at least 50 pips. But if your risk is 76, just go after 1-to-1. So your reward would be 76 pips. 1243. 1243. So my reward will be plus 76 pips. Let's see what happens. Every candlestick represents 1 hour trading. 1, 2. Now, something to point out. Please be so kind to type in a Y or yes if you can see that my stop price was hit. Okay. It's important that you notate and understand that I did not take a losing trade because my entry buy has yet to be activated. Once the market crosses over this green level and my entry buy is triggered, that's when I'm entering into the market. If it never touches this price point, I never trade. So that we're at a stop price, my stop hasn't been activated because there's no open position. It is only when the market crosses over this price point, which you determine, which is 10 pips above the high, is when your entry buy turns into a market buy. This means I am now physically buying this market and I just turn around, hit my stop price, I will lose 76 pips. Or if it hits my reward price, I will make 76 pips. Let's see what happens. Within 1 hour from being taken in, I made 76 pips. Please be so kind to type into me in the question section box if you thoroughly enjoy having the opportunity to generate 76 pips or 760 US dollars in 1 hour. Steve says, why didn't you lower your entry to the bar's high where the original stop was located? Great question. Richard, strategies are designed and rules are put into place to allow you to accomplish what you want to accomplish faster and potentially safer than just jumping in. What I mean by that is through years and years and years of trial and error, we have discovered that by placing your entry just 10 pips above the high U-turn at 3 o'clock, gives the market enough wiggle room to prevent you from being taken in too early. See, if we would have bought the market only to watch the market go our way, but because we have learned from past history and we began to use probabilities on our side, we just by leaving your entry buy 10 pips above that 3 o'clock candlestick, you're in great shape from avoiding unnecessary advantage of the runs, which is fantastic because that's all we're looking to do is duplicate what the market does. If you don't know too much about the Forex market, I can understand that that's difficult to follow along. Just understand that we kind of calibrated this, we fine-tuned it to where this works. Okay, so that's 76 pips or 760 US dollars. Trade's over, day's over. 1 day, 1 trade per currency pair. You can do this up to 6 currency pairs. Now, did the market go higher? Sure. Could you have made more profit? Absolutely. But that's not what we're here to do. We're here to take advantage of the market movements. We're here to take advantage of the highest winning percentage direction and get to first base. If you would like to hit those home run trades, you need to have home run training. But this is just a nice, simple technique to get you involved into the market. Okay, so this is my 3 o'clock candlestick. And what we need to determine is, are we in the buy low price or are we in the sell high price? This candlestick, in my personal opinion, is going to divide the room to where some will say, well, you're at a buy low price, let's buy it. And some will say, you're at a sell high price, let's sell it. If you ever find yourself arguing and saying, well, I don't really know, I think it's a buy low, I think it's a sell high, typically you don't want to trade that day because you don't want to enter in the market on thinking. You want to enter in the market by saying, hey, because of this, I'm going to do that. And so I'm a big believer in trading the direction of the zones. I'm a big believer in identifying trend direction by saying, hey, look, the market, if the market is going to go up, the market's going to make higher highs and higher lows because that's just what the market does. It doesn't matter what you look at. This is just what the market does when it goes up. It makes higher highs and higher lows. And if the market's going to go down, it's going to make lower lows and lower highs. And the fastest way to determine if the market is anticipated to break one direction or other is, number one, look at your zones. Are you above your hand-drawn trend line or are you below it? Are you in the buy zone or are you in the sell zone? Number two, are we making lower lows, lower highs? Are we making higher highs and higher lows? We were making higher highs and higher lows. It was a very, very simple concept to say this high is higher than this high. I mean, this low is higher than this low. This low is higher than this low. But now, this low is lower than this low and this low. No doubt about it, we have a reversal in our hands. And if you're in the sell zone and the market's making lower lows and you have a 70+% chance the market's going to form a high lower than this high, it's a good chance that you're in a sell high position. which means we want to set up to sell this market. So that's exactly what I'm going to do. And so I'm going to place an entry sell order 5 pips below my 3 o'clock low. So if it's 52, it's going to be 47. I'm going to place my stop 5 pips above the high of U-turn. 42, 47. So my entry sell is 5 pips below low. My stop is 5 pips above high of my 3 o'clock candlestick. And if my risk here in this trade is going to be 98 pips, well, I'm going to go after 98 pips in reward. My reward is always at least 50 pips, so sometimes you have risk of like 30 pips. That's when you go after 50 in reward, but if you're risking 98 pips, go after 90 pips in reward. So that's 0949. 0949. 0949. Plus 98 pips reward. Let's see what happens. 1. Within 1 hour, the market triggers your short trade and hits your reward. Go ahead and type it to me in the question section box if you'd be pretty pleased, pretty happy making 98 pips or $980 US in 1 hour. This is how investors are doing it. 1 day, 1 trade per currency pair. So let's move on to the next day. So yeah, this strategy is not a very difficult strategy. It shouldn't be viewed as something very, very tough. It should just honestly be viewed as something that says, hey, are we buying low or are we selling high today? Okay. This is 3 o'clock. My 3 o'clock candlestick. Right here. I want you to try to think. Just look at this and ask yourself, is it a buy low or is it a sell high? What do you think? Just look at the candles. Look at the trend. If you're saying, I don't know, that's an issue for sure. If you don't know if we're in an uptrend or a downtrend by looking at the chart, that is also an issue for sure. Well, let's see if we can put on some, let's see if we can spatially increase the view here. If the market moves in waves, it's going to make lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. If the market's going to U-turn, it's going to make higher highs and higher lows. Does anyone know what a crown formation looks like? You may know them as head and shoulders, but step 1, the market takes out the downward trend line. Step 2, the market takes out or meets a level of resistance. Step 3, identify the left tip. Step 4, anticipate the right tip. We have a nice tool here that outlines the crown. Please be so kind to just confirm that you see the potential bullish crown. You see the obvious left tip. You see the center tip was established. Trend line was broken, and this is a crown. There's the right tip. It's 3 o'clock in the morning. We know between 2 a.m. and 5 a.m. there is an extremely high winning percentage chance of the market forming a higher low of the day. Based upon the evidence of a bullish crown, we really need to recognize and say to ourselves, time to buy low. So that's what we'll do. We'll set up to buy low. We'll place an entry buy order. Excuse me. We'll place an entry buy order 10 pips above our 3 o'clock closed candlestick. This high is, let's call it 15. We'll do 25. So entry buy plus 10 pips above high. Stop is at the low when buying. And my reward is always at least 50 pips. Let's see what my risk is. My risk involved in this trade is going to be 48 pips, so my reward will be 50 pips, 2.1176. 1176. Plus 50 pips reward. Okay, let's see what happens. Every candlestick represents 1 hour of trading. Within 1 hour, the market triggers us in. Hits the entry buy, triggers the buy. The entry buy becomes a market buy, which means I am now physically buying this market. I'm using a standard position or average pip size of $10. Within 1 hour of being taken in to the market, the very next candlestick hits my 50 pips. And 50 pips is equal to 500 US dollars. So I only have so much time. Today. I have like 9 minutes left, but my question is real simple to you. Would you enjoy trading a simple methodology like this? Yes or no? Do you find this to be easy to follow, easy to obey, and easy to execute? If you look at these three, you can see 76 plus 98 plus 50. The big question is, would you like to make 224 pips or be in a position to potentially generate 224 pips or 2,240 US dollars with a pip size of an average pip size of $10? Now, how well does this work? Well, let me show you a couple track records. Let me go to here, and let me bring you to myfxbook.com. I want to show you a handful of track records to show you that, what this can really do for you. Market traders, we'll go to a couple things. We'll pull up the Joshua Martinez, the dollar drop prediction, and then we'll also go to FX Pathfinder and we'll view. Please be so kind to type in the wire yes if you can see the gain of 4,967.6% return on the investment or initial positive investment. This is FX Pathfinder. That's my handle. This is a real US dollar trading account. Track record has been verified. This is 4,514 pips. This is winning 57% of the trades. This is how I was when I first started trading. Okay, up and down, up and down, up and down, up and down, up and down. Got it. Then in October, every October here at MTI, we started a tradition. I opened up a $10,000 trading account, and then I used techniques to trade this $10,000 trading account, and all profits made in October we donate to our local charity, Florida Hospital for Breast Cancer Awareness. Please be so kind to type in the wire yes if you see Joshua Martinez, real US dollar trading account, track record verified, gain of 108.13% return, 2,223 pips generated, winning 72% of the trades. I'm proud to announce that over 10,000 US dollars was donated to a local charity in this event, which is awesome. This is our latest one. This is our dollar drop prediction. This is a real USD. We got a gain of 48.1%. So far, we're up 2,447 pips since March 19th. We placed 47 trades, winning 74%. Profit is 23,854 US dollars. Here's my question to you. Am I showing you consistency? Am I showing that works on a daily basis, and then am I backing it up with solid track records with solid performance? I'm going to make this short and simple, really straightforward. Here at MTI, we host, or what I host, is what's called a live market Forex mentorship and empowerment program. And it's a trading club in which we trade live. And we place these trades, what you see in front of you, and these track records, what you see in front of you, live in front of our students. And you learn strategies just like what you see on your screen, and we take you from where you are right now, and we begin to bring you to where you want to go if you follow our blueprints. Some don't follow them, which is fine. But those who do, they begin to really enjoy the income. We have a live market Forex mentorship empowerment program in which we trade 8 times a month. And it is a monthly subscription of $297 US dollars. But to say thank you for having the opportunity to be the Forex authority today, and to say thank you to Trading Pub, everyone in this room who wants to try this out, you will get a risk-free, a 100% risk-free opportunity to try this out for the first 30 days for just $27. If you want to try this out for just $27, I'm sending you a link into the question section box right now. Just click on the link. That's it. It's going to bring you to a 100% secured online sign-up page. This is it. You're going to have 60 minutes or 1 hour to try this out. And if you miss it, then by all means, you're going to be stuck paying $147 a month. If you like the mentorship and you try it and you say, hey, you know, this is a strategy that really allows me to generate consistency, I'm generating the income that I'm looking for, we'll give you a 50% savings for every month thereafter, so it's just $147 a month. If you're the type of trader that says, hey, look, I'm a fast learner, I got it down, I'm ready to rip, I'm ready to go, cancel it. You get a 100% risk-free investment and a 100% money-back guarantee. If you're unsatisfied after experiencing the live market Forex mentorship and empowerment program, then simply contact us within 30 days and we'll cancel your membership and give you a full refund of your special introductory offer. What I want you to do is just imagine having the opportunity to experience live webinars where you're learning from experienced traders who has days like this. 964 pips over 9,861 US dollars. Here are client testimonials of individuals who work with MTI. Thomas S. made 4,500 US dollars his very first week. Anthony S. says it took about a month to see a return, but now I'm making 3,000 pips. With $1 a pip investment, that's $3,000. With an average pip size of $10 or standard lot, that's $30,000 a month. You're going to be learning from 2 Forex masterminds. You have myself, which is on the left-hand side of the screen, in which I have tremendous experience of teaching investors how to grow their accounts and duplicating my formula of success. And then you have Christopher Pulver, who's going to show you slow growth or trading opportunities that last anywhere between 1 day to 5 days. I'm going to show you how to generate income same day. He's going to show you how to generate income within 1 to 5 days. Both are very experienced. Both have extreme track records and are proven methodologies. You just have to gravitate towards the one that you like. You will get 8 live market online Forex sessions per month with 2 of MTI masterminds. You receive a Forex market preview video each week, which that means is you're going to get a game plan of where to get in, where to get out every Monday. Everything's recorded, so you do have on-demand access, and once again, it's backed with a 30-day satisfaction guarantee. All this for just $27 for your first 30 days. After that, if you like it, it's $147 a month. Ladies and gentlemen, I want to say thank you to each and every one of you for giving us the opportunity to speak with you, regarding the Forex market. I also want to say thank you to Trading Pub for allowing us to come on here and being the Forex authority. For those of you who have questions, go ahead and type in the question section box. I'm more than happy to answer any questions that you may have. And if not, that no big deal. We'll go ahead and pass it back over to Trading Pub. But thank you again. Hopefully you learned a lot, and you can apply that strategy that you learned tonight. But on that note, every day, helping traders find a way. This is Joshua Martinez out.
Well, I tell you what, Josh, thank you so much for that super presentation on how you use the London breakout strategy to consistently trade currency pairs. I mean, it's amazing